Hello, hello. This is your host, Sheraz Ahmed, ready to kick off another bite-sized episode of the Crypto Valley Association podcast. A special thank you to Seba Bank for supporting this initiative as they pursue their mission to redefine finance for the new economy. Now let's discover together the growing trends of this fast-moving space and try to shed some light on the mysteries it contains. Today, we are joined by Claus Skaaning, Chief Executive Officer of DigiShares, who are on a mission to build bridges between traditional finance and blockchain technology through the issuance of digital shares as tokens on the blockchain. We've heard lots about this topic, so let's dive straight in and uncover the complex world of tokenization. Hey, Claus, how's it going?
It's going great, and thank you very much for inviting me here on the podcast. It's a great pleasure. Looking forward.
It's our pleasure as well. And how about we start this whole episode off by hearing about how you first got involved within the blockchain space?
Yeah, actually, I bought one Bitcoin back in 2014. I think I paid a few $100s for it, but I didn't tell my wife about it because I thought she'd give me a hard time about it. But it turned out to be a pretty good investment. Then I didn't really look at the area for a couple of years until maybe 2017 or 2016 or something like that, when I left my previous job in an AI company. And basically started looking for new opportunities. And I met another guy, and we discussed sort of different areas that we could focus on, and basically just settled on blockchain as a kind of career path for us. So we discussed different projects we could do and came up with a project called Venture Fusion, which was basically a kind of startup incubator, decentralized startup incubator on the blockchain using tokenized equity in startup companies as a means of payment for anyone participating in the startup project. So really a kind of bootstrapping platform where you could pay with tokenized equity in your startup. That idea turned out to be not very good and very difficult for us to launch, but we did learn along the way that the tokenization was really, really early stage at that time, and we'd have a real chance of actually becoming a serious player in the space. We launched DigiShares around 4 years ago, I think, and developed from that point forward.
Wow, great, 4 years ago. And I'm sure, Klaus, that your wife is probably wishing you bought more Bitcoin
Yeah, me too.
back, back in the day. But great. And maybe, so now we can get further in depth into what DigiShares really is. I mean, if the name doesn't give that away already.
Yeah, so DigiShares is a provider of an issuance platform for tokenization of real assets, with most of what we do really with a focus on real estate being the single largest asset class that is really relevant for tokenization. We operate on a white label business model, meaning that we don't go direct to market, but we only white label the platform to our clients and partners, which are really real estate developers, asset managers, crowdfunding platform operators of different types. And the platform provides functionality basically for crowdfunding or financing part of the life cycle. It has a lot of functionality for corporate management, share cap table management, and so forth. And it also has a bulletin board marketplace where the investors in the project can trade. So that's basically what we do. We are a software technology provider, and we work together with other partners to provide an end-to-end solution, including legal, marketing, and so on.
Okay, wonderful. And I'll get into a little bit more detail with regards to the issuance platform as per se. But you mentioned something quite interesting, that real estate is the only real use case for this type of tokenization. I mean, or the only one that really fits. What do you think about the others? I mean, such as like art or any other type of tokenization?
Yeah, so our platform is agnostic and can be used for any kind of asset, really. And we have many different types of assets in our pipeline, including art, mining, renewables, private equity of different types, expensive gemstones, and so on. Lots of different stuff. We have a project also working on in whiskey as an investment object. So there's no limitation. You could say the imagination is free to explore the space. But I would say from a marketing perspective, our company is focused on real estate. We target the real estate space. We see it as the single largest asset class that is relevant for tokenization. It's a huge market. There's more than 500,000 real estate developers globally, and we're speaking trillions of US dollars. It's also a very homogeneous market, so the value proposition of a real estate developer in the US and Europe is quite similar. So we can target them pretty much with the same type of functionality in the system. And their value proposition is just really, really strong. It's a very illiquid asset, as you probably know. And it's also an industry that is plagued by old-fashioned, paper-based, antiquated processes. So there's a lot we can do just with digitization and automation in itself. And yeah, tokenization just provides a great value proposition for that space.
I definitely see. And we'll get into some of the advantages a little bit later down the line. And I definitely see why you're focusing a little bit on the digitalization of real estate. I mean, I prefer much better real life whiskey than virtual one in anyway. So, but how about we talk about the reasons why you decided to create a white labeled issuance platform? Like, where do you see the unique selling point of having it as a white label? Where do your customers see the advantages in that?
Yeah, it's a good question. It has to do with our business model. I think that from our perspective, a white label business model is just much more scalable and longer term profitable for us. We get to deliver a platform to any asset manager or real estate developer, and we can also deliver the platform to crowdfunding platform operators in different countries. So the space, the market for us is just much larger, I would say, rather than going direct to market and maybe creating our own real estate crowdfunding platform, for instance. So that's one advantage. Another advantage, I would say, is the ability for us to, you could say, avoid being regulated or having certain licenses in place. It's not necessary for us. We basically just provide the software. Of course, we have to be concerned with the clients and making sure that they get an end-to-end solution. So we do need to be aware of the licenses that are needed. But generally, of course, if you tokenize your own assets that you own and control, you don't need to have any licenses in place. So our business model, you could say, is more regulatory light compared to going direct to the market.
And maybe we can take a step back now. And tokenization is a buzzword within this space. Maybe you can give us a little bit more information about the main advantages of tokenization and potentially any disadvantages that tokenization might bring.
Yeah, it's a good question, actually. And we work a lot on, you could say, understanding and formulating the value proposition and making it easy to understand, and both for ourselves and also for our clients, of course, and our partners. So there are sort of advantages and benefits on different levels, and some advantages are realized now, and some will be later as the ecosystem matures. So right now, we can directly go in and digitize and automate a lot of processes for the real estate developers relating to investment or purchase into certain projects, payment of dividends, trading, and so on. These processes can be digitized and automated to a great degree compared to what is possible now. And we think just the corresponding reduction of administrative cost is maybe 3, 4, 5% on an annual basis. So that in itself is quite significant. Then you have the automation in itself, which allows real estate developers to have just as easily 1,000 investors into each project as they have 10 or 20 today. So they get much higher degree of ability to reach smaller investors, reduce the ticket size, and fractionalize, and in turn democratize and allow smaller investors to invest into the projects and sort of expand the scope of potential investment funds out there that they can tap into. So it should become easier for them at the end of the day to fund their projects. Then we have, I would say, the liquidity itself. Real estate is extremely illiquid. So just the ability to provide a trading facility on the platform that the real estate developer controls himself and that allows the investors to trade in a peer-to-peer fashion is something completely new for them. They didn't have it before. It was extremely time-consuming and expensive for them to facilitate a trade. So that in itself is a completely new opportunity that I think is hugely interesting for many of our clients.
Okay.
This is what we can do now. We can do even more in the future, I would say. So we are starting to tap into the DeFi ecosystem, and longer term, we can potentially allow the real estate developers to click a few buttons, and then use their real estate-backed tokens as collateral for DeFi lending. So instead of going to the bank, they can just tap into the hugely competitive DeFi lending space and get access to US dollar denominated loans. So the future looks bright.
Okay. Wow. Bright. Very, very interesting. And maybe on another kind of side of the coin, if we're looking at the future with regards to tokenization, and especially like liquidity and then onto volatility, do you believe that if the real estate markets become more liquid, there will be more volatility as potentially more retail investors will be investing into the real estate space, and that what we've seen previously as being a stable, if you kind of take out some of the outliers of standard deviation, a rather stable market, do you believe it can bring volatility to the real estate market, and then thus kind of bring a lot of negative aspects to a unstable market?
Yeah, I think it can actually, and it might be a negative point, at least short term. So I think short term, there is a risk that you can see real estate assets traded at a price that is far removed from the appraisal value. But I think longer term, when we start to see more investors and traders and potentially DeFi traders coming into the ecosystem and trading, I think that we will not see it so much. But of course, it's a real risk, you could say, and putting your asset out for public trading, of course, makes it more difficult for you to control the price. But there are pros and cons. So you might also see the price becoming higher. There is an illiquidity punishment or penalty, you could say, in the real estate space now, which is 10, 20, 30%. So you might see just the value of your real estate property go up correspondingly when you make it liquid.
Yeah, that's a very, very interesting point, right? The ability to tokenize an asset, to create an asset token or a security token, and then to see that, well, that price is higher than what maybe the asset would be worth on the market, due to the fact that, well, it has these kind of components of extra liquidity, etc. So maybe kind of tokenizing your asset could increase the value as well, which would be another value proposition to want to actually tokenize in the first place.
Yeah, exactly.
Incredible. Only the future will tell, and I'm looking forward to discussing more about that, and maybe we can enter the topic that you just alluded to before, in the kind of DeFi side, or even just the decentralized element. And it's a little bit of a tricky question for you, Claus, but we often talk about centralized tokenization. What are your thoughts about its decentralized form? I mean, you see protocols and various efforts such as like Ravencoin that are doing some sort of decentralized tokenization. Is there a world whereby tokenization could be completely decentralized, or do you believe there still needs to be this centralized validator?
That's a great question. There are two sides to the story. I think right now we are sort of customer driven and customer motivated in our development, and our clients, the real estate developers, they care about other parts of the value proposition, such as automation, reduction of administrative costs, liquidity, and so on. But I think that, of course, overall there is a drive towards decentralization, and I think that we will also see the industry moving in that direction, at least to some degree. We do have regulatory requirements, such as the ability to maintain a centralized view of a share cap table, for instance, that is hard to decentralize completely. You can have the share cap table on the blockchain, but still you need some kind of central place to view it, right? You can also decentralize the ID of users and the whitelisting process to some degree, but the decentralized ID frameworks available today don't really fully support the ability to do KYC on users and to have, you could say, a verified, trusted KYC on users, accreditation, and so on. And also, there's no widespread standardized framework for that, but the industry will come up with it, I'm sure, and in a few years we'll be using it, and we'll be able to decentralize more. But right now, it's really not, I would say, an important objective to us and to our clients. But I think it will develop over time.
Okay, yeah, it's a very interesting point, right? In terms of blockchain technology being just one of the suite of the new tools coming out, and that you will need other technologies to support blockchain if we want to truly kind of move into a next wave. Very, very, very interesting point that you raised there. And maybe another that you actually pointed to with regards to these kind of regulatory hurdles and red tape. I mean, being in this space since 2016 and having the vision and the view of, okay, we can tokenize anything, anywhere, and that being so beautiful, and then quickly coming to realization, well, it's not as easy as that. I mean, maybe you could tell us a little bit more about why you believe regulation has really been holding back tokenization from flourishing, if that really is the case. And yeah, maybe some comments on the regulatory side.
Yeah, it's a great question. Actually, I don't think that regulation has been holding back tokenization so much. In many countries, the regulators, I think, have looked at it the right way and have viewed tokenization as basically just another way to digitize securities. And actually, in a lot of countries, including Denmark, where we're based, the regulation already supports digitization of securities. You can have share certificates that are digital, you can have a share cap table that is digital, and so on. The regulation is actually pretty close to already supporting tokenization in many countries. But of course, then we still need to work with the regulator in order to understand exactly what happens when you have, you could say, a self-sovereign security stored in your wallet, right? That you can transfer peer-to-peer and so on, and you might want to use it as collateral for a loan and so on. So there's different scenarios you still need to sort of review with the regulator in order to understand how you can be fully compliant. So I think the regulators have actually done a pretty good job, but of course it takes time to go through the sandbox process in many different countries and clarify these aspects. We are involved in 3 or 4 sandbox processes in different countries now, together with our partners, and it takes time. But I think the regulators are very open to this and supportive, and they want to see it happen. They see the benefits as well, and they also see that I think the global industry is going in this direction. There's no avoiding it.
Okay, interesting. And Klaus, we don't have so many Danish individuals or even companies on the show. Maybe you can tell us a little bit more about how Denmark has been facing the whole, maybe even like blockchain technology as a whole, but specifically as well tokenization. How the jurisdiction is playing out with regards to others, such as ours in the Crypto Valley in Switzerland, or be it in other places around the world.
Yeah, I guess you have Niklas Nikolajsen as one of your members. He's a Danish guy, right?
Yes.
Bitcoin Swiss.
Yeah.
Then you have MegaDAO, which was founded in Denmark as well by Rune Christensen. You have Chainalysis, which is also a Danish founded company. So I think
Wow.
Denmark is actually quite strong in the crypto space.
Yes, more than I knew.
We have some good companies all developed into unicorns at this stage, and hopefully we'll have more in years to come. The community in Denmark is relatively small, and I think some of our important guys moved to Crypto Valley, which is great. So yeah, let's keep developing that relationship.
Yeah, wonderful. I'm sorry for taking all your talent away. Great. And so we talk a lot about the future, right? And industry experts, I mean, they really do expect that much of the financial infrastructure will move onto blockchain in the coming years, even the next decade, right? In your eyes, what does that process look like?
Yeah, that's a great question. If I could completely respond to that, we'd surely win the competition here. So we have of course smaller companies, startups like us, who are trying to build to some degree a parallel financial infrastructure and trying to do things outside the banks to some degree, just in order to move things forward and to reduce friction and administrative costs and so on. But we are also collaborating with the banks. We want to collaborate with the banks, and we want to help them to sort of jump into this ecosystem as well and take their role. And then on the other side, we have the banks and the sort of incumbents working to try to keep up and to try to understand what is happening here and making their pilot projects and their experiments, trying to understand how they can respond and keep up. But I think that overall we see a massive trend towards everything moving over to the blockchain. Blockchain and tokenization is really not a thing in itself. It is an infrastructure. It's a value add, and it's just a better way to facilitate any kind of ecosystem where you need to transfer digital assets of different types, right? I think that's well documented and proven so far. So I think there's no doubt in my mind that this trend will continue in a massive way, and I think we're just seeing the beginning now. I also think we'll see a massive sort of integration between the tokenization ecosystem and the DeFi ecosystem that we're just starting to see right now.
Mm-hmm.
I think there'll be huge innovation and a lot of new sort of financial services developed over time. I like that it's so that everything that is done in this space is sort of so atomic and so interoperable. And the decentralization helps with that, and the decentralization is critical in order to make sure that everything is atomic and interoperable. So that's another reason why we should decentralize more. I think that's what I can say. It's hard to say anything more specific, I think.
Yeah, no, I think you provided great clarity on that question. And maybe a last one for the road here. To what extent do you believe that the cryptocurrency markets, as per se, that are vastly volatile now, are correlated to the blockchain ones, right? And kind of security tokens having an underlying asset. Do you see that the same volatility playing out? Do you believe that the crypto markets and the emotions that are there are going to be mirrored within the security token side? How do you believe that relationship is going to develop in the future and the years to come?
That's a great question. I think they are fundamentally different asset classes, right? So I think they will not be correlated to a great degree.
Mm-hmm.
I think DeFi investors and crypto investors will become longer term very interested in real asset-backed tokens as a way to diversify and protect their holdings. At the end of the day, I think even the most hardcore crypto investor is sometimes concerned that that the value of his assets could drop to zero, right? So I think there will be always some interest in diversifying at least maybe 5-10% of your portfolio into something that is backed by a real asset and cannot, under any circumstance, drop to zero value. So I think we'll see a large interest in that. So a lot of the DeFi ecosystem will be, I think, extremely interested in being able to get access to real asset-backed tokens.
Mm-hmm.
We also see it the other way around. So the real estate world, I think, will be extremely interested in getting access to the DeFi ecosystem for DeFi lending, for decentralized trading, and so on, and for all these sort of new sort of financial atomic functionalities that are being developed. That's maybe not a direct response to a question, but at least it has relates to it.
Yes, no, it definitely was, and it's very hard to be completely precise as well because of all the movements and all the potential this market holds. But thank you so much, Claus, for joining us today. And I'd just like to ask if you have any final words for our listeners today.
No, it was a pleasure to be on the podcast. I look forward to being a good member of the Swiss Crypto Valley and developing our relationship.
Wonderful. Well, thank you for joining us. And if you enjoyed this conversation, feel free to check out more on our website, cryptovalley.swiss, where we host plenty of events, educational material, and even provide information on how you can join our growing community. Thanks again, Claus, for joining us.
Thank you.
Stay tuned, stay safe, and until next time from the Crypto Valley in Switzerland. Bye-bye.